Have you ever sat there staring at your charts, drawing what you thought were the perfect support and resistance lines? But then, out of nowhere, the price just crashes through your line, and you're left with another losing trade. Super frustrating, right? I know, I have been there too. And so has tons of other traders. 99% of traders are still getting support and resistance wrong. It's a widespread issue and it can seriously damage your confidence and not to mention your trading account. But here's the good news. It doesn't have to be this way. What if I told you that you could learn to spot the real, dependable support and resistance lines, the ones that could give you a high win rate and really boost your trading performance? That is exactly what this video is gonna be all about. We will tackle support and resistance head on and talk about 5 game-changing concepts that most traders overlook. You will learn about common mistakes that you need to avoid, how to find the best support and resistance lines. You will be able to tell what makes a support and resistance more likely to break, and a few more secrets as well. So if you're ready to join the small percentage that actually knows how to use support and resistance correctly, you have found the right video. Let's not waste any more time, let's dive right in. So to understand the first game-changing concept, I want you all to look at this chart right here. Can you see anything wrong about this chart? Well, this chart right here, which by the way is a Tesla chart on a daily time frame, is a prime example of badly drawn support and resistance levels. And the reason for this is that we simply have too many support and resistance lines. Imagine this, let's say you want to go long on this pullback right here. You have your support level at around 264, so you enter your long position. After the candle close, you put your stop loss slightly below the support. But now we encounter a big problem, because as you can see, just a tiny bit higher, we have a resistance level. And what are you supposed to do? Are you supposed to sell just slightly after you enter the position? And if you plan to sell at this level, what happens then? How are you supposed to ride the waves of the market if you have resistance levels everywhere? And also, let's say that the price goes up to the resistance, and because you have a resistance, you want to go short and bet against the market. But the same thing happens here. How can you go short when you have a support level just below? This right here is a situation where you can't really win. You can't take any trades. The reason we're using technical analysis and support and resistance levels in the first place is to make the chart easier to read, not harder to read. So if your chart looks like this, then you know that you have a big problem. So the lesson here is pretty simple. You have to avoid drawing too many support and resistance lines. Later in this video, we will take a look at exactly how you find the best support and resistance levels. But the first lesson I want you all to really learn here is that you want to have a clear chart as possible. So now when you have learned this lesson, we are ready to jump into the next super important concept, and that is how do we find the best support and resistance levels on the chart. And the first thing you want to look out for is that you want to find as clear levels as possible. Many times it can help to use the drawing tool here. If you're using TradingView, you have the tool right here, and you can try to draw the price action of the market, right? So by drawing a line like this, you can avoid the sort of noise in the market and more clearly see where do we have clear swing highs, where do we have clear swing lows. And by looking at the line like this, where is the most obvious resistance level? Well, for me, it's pretty clear. The most obvious resistance is right here. The reason for this is, as you can see, we saw one clear touch as resistance right here, and then we saw yet another clear touch. And if we look a bit to the left here, we will perhaps not surprisingly see that this is a level that have been respected historically as well. You can see we look way back here on the price, and we can see that this one was actually a previous support level for a long time ago. So in this case, the market have been respecting this level both as resistance but also previously as support. You can also see that this one acted as support a few times here as well. By the way, the tool I used to draw my resistance level now was that I clicked right here and I used the rectangle tool. For beginners, I recommend you guys to always use the rectangle tool instead of using a line. The reason for this is that when we are talking about support and resistance levels, you should always look at the lines sort of as zones, because the support and resistance levels in the market are never perfect lines. They are always sort of broader zones. The second principle here you have to learn about is that you want to adjust your levels to get as many touches as possible. So let's take a look at this gray area right here. Let's zoom out a bit and let's try to adjust this one to get as many touches as possible. As you can see, to include the price action we have right here, it makes sense to have this support adjust this one down a bit to at least include all the real bodies of the candles right here. It's okay to have small candlestick wicks below your support area, but you want to try to at least include the real bodies, which is basically the wider part of the candlesticks. Let's take one step back here and try to identify, can we find any other important support or resistance levels right here? For me, it's pretty obvious that we have some sort of clear resistance right here. You can see we have 1, 2, 3 touches, right? The price got rejected here multiple times. So for me, this is a level that is clearly visible on the chart. We adjust the area, we use the rectangle tool and adjust it to get as many touches as possible. So this for me is yet another clear resistance level. Another very important principle you need to learn about is that strong moves or power moves away from these support or resistance levels make them stronger and more significant. As you can see, for example, right here, this was in September 2022 for the Tesla stock. You can see that when the price went up here to the resistance level, we got a strong reaction. You can see the price dropped fast after we reached the resistance. If the price instead would have looked something like this, let's say the price went up here to the resistance and you saw a little pullback, went up again, you saw a little move, went up again, just another little move. This actually makes the resistance weaker. The stronger the move away from the support / resistance level, the stronger the support and resistance becomes. Now let's talk about concept number 3. How can we tell when a support or resistance level will break? Let's use the example I showed here in the beginning of the video. This is the Bitcoin price and we are looking at a weekly time frame. So every candlestick on this chart represents 1 week. And if you take a close look at this gray support level, would you say, is this a good or bad support? Well, from the principles we talked about earlier in the video, this one looks like a good support, right? We have many touches, many strong moves away from the support. You can see support came in so many times on this level, but there is a key factor here that we need to pay attention to. To see this more clearly, let's use the technique which we talked about earlier in the video by drawing a line and try to follow the price action here. What you hopefully can see here is that yes, we are seeing a support, we are bouncing many times, we are getting many touches, which is a good thing. However, a critical thing to notice here is take a look at how the price are looking. You can see we have one high right here, and then we printed a lower high. The next time the price went up, we printed a lower high once again. The next bounce was an even weaker bounce, and then the next one was a super weak bounce here. So we have a support level, and the bounces from the support was getting weaker and weaker. We can see that in the end here, before the price broke the support level, the price was pretty much crawling at the level. And this is the lesson right here. Consecutive lower highs into support makes the support more likely to break to the downside. And when you learn fundamental support and resistance principles like this one, you can, without even knowing about specific patterns, understand that this is a bearish pattern. This right here is a classic example of a bearish pattern. This is the descending triangle pattern, and this pattern is actually built upon this principle. You can see right here, we had a support level, right? We saw multiple bounces off the support, which is a good thing. But as you can see, the highs here are getting lower and lower, which makes the support more likely to break to the downside. So this right here is why this is a bearish pattern. And by understanding this principle, you don't even have to learn the specific patterns as long as you know this important concept. The next concept I want to talk about is a game changer, and that is that support and resistance are not created equal. And you may wonder, what do I mean by this? Well, when we have an uptrend like we have right here, you can see we have one swing, we have a pullback, we have a swing to a higher level, pullback, and eventually we had another swing to a higher level. When we have an uptrend like this, then support is stronger than resistance. And this is because when we have an overall uptrend, we have more buying pressure than selling pressure in the market. That is even why the price is going up here. And because we have an overall stronger buying pressure in the market, the support levels you find in an uptrend will usually be stronger than the resistance levels you find in an uptrend. So for example, let's go back in time and let's say that your chart looks something like this. You know that we have an uptrend and then a support area appears. Let me actually delete this gray area so we can see. You can see that the price here saw a strong move down, we got rejected, we went down once again, and we saw yet another strong push towards the upside. By seeing these two reactions, we can draw a support area like this. What you can also do here is that you can see we can draw this area a bit further because this area was a previous resistance as well. And a common principle in trading is that many times, especially in uptrends, we flip previous resistance, right, to become support here in the future. And because we are in an overall uptrend, this support level gets stronger. And let's see how this support reacted in this specific case. You can see we got a very nice bounce from the support area, right? You can see we did touch this support area, just touched it, and then we saw an explosion here towards higher prices. The same thing is true for downtrends. Right now we're looking at a Bitcoin daily time frame, and as you can see, Bitcoin traded in a clear downtrend right here. You can take a look at the line of the clear market structure we recently drew, and from this we can draw a sort of broader resistance area. And because this resistance area was in a downtrend, it's more likely that this resistance will be a stronger one. Let's take a look here. Let's look a bit to the right. We continue to draw this resistance, and we can see that it took a very long time for the price to once again reach this resistance. But once we reached it, we got a strong reaction to the downside, and this resistance held. Now guys, let's use what we have learned in this video to develop a trading strategy. First of all, let's take a look at this chart. We are once again using Bitcoin right here, and let's try to draw the most obvious support level here on the chart. You can see that starting from here, we can notice that we have a very clear support. This support started back here during an uptrend, right? So Bitcoin was in an uptrend. We saw the price getting a few strong reactions off this support. The price came back and saw multiple strong reactions here on the support level. One thing to be a bit cautious about, however, about this price action right here, is that you can see we had one high and then one lower high into support. And remember from the previous lesson, when we have many lower highs into support, the support gets weaker and weaker. But the good thing about this example was that even though we had one lower high into support, you can still see that pretty much every time the price came down at support, we saw strong bounces here towards the upside. You can, for example, see that we had one high right here. The next bounce, we printed a higher high. So this is not similar to the case we talked about earlier in the video. One super important thing about when you are developing your trading strategy is that yes, support and resistance, really understanding support and resistance is critical. It will improve your trading so much. But when it comes to trading strategies, you pretty much always want to combine support and resistance with other technical variables. For example, candlestick patterns, chart patterns, even indicators, and also of course risk management and trade management as well. So let's combine this support and resistance level with a candlestick pattern. Let's zoom in here on the most recent candle here on the Bitcoin price, and what we can actually see here is that this green candle together with the previous red one, this is actually a candlestick pattern that we call a bullish engulfing pattern, and that is a Japanese candlestick pattern that indicates a potential reversal here to the upside. So we are seeing a bullish pattern appearing at a key support, and remember, this support was created in an uptrend, right? So we have multiple factors indicating that this can be a good trade. So let's say that we enter the trade right here, and what I usually do, we enter at the close of the pattern, right? So where we got confirmed that we have a bullish engulfing pattern. The stop loss, many times when we are only looking at candlestick patterns, you usually set the stop loss below the pattern. But because we have a support level right here, I want to set the stop loss below the support area, and I also want to have, you know, a little bit of space here between the support area and the stop loss. When it comes to profit target, there is many different strategies you can use here. One method is to use a sort of minor support or resistance level. You can see one can definitely argue that we have some kind of resistance right here. You can see we got at least one strong reaction, and then we saw another strong reaction from that resistance. And remember from earlier this video, when we see strong moves away from resistance, this one makes it a bit more significant. So in this case, it makes sense to have the profit target below the resistance, and right now we are having an exact risk to reward ratio of 2, which is a very common risk to reward ratio. So let's enter our trade here and see how it goes. As you can see, in this particular case, we pretty quickly reached our profit target and we locked in our profits. But another thing you can notice here is that we did actually find some resistance right at this resistance level we drew out. You can see we got a pretty strong reaction right here during this candle. We saw lots of selling pressure coming in at this resistance. We got a small reaction once again, but you can see here that during this candle, we actually managed to lock in our profits. So yeah guys, that's pretty much it for this video. I really hope you gained some value. If you want more educational technical analysis content such as this one, please don't hesitate to subscribe and hit that notification bell. Now when you know about support and resistance, one thing that can further improve your technical analysis and make you win more is learning about candlestick patterns. So guys, I highly recommend that you watch this video next. I'm sure it can help you improve your win rate even further.